The views, comments, and opinions of the following program do not necessarily reflect those of Morris Media Studios, MorrisMediaLive.com, or its affiliates. Listener discretion is advised.
Yes. Welcome, everyone. Thank you so much for tuning in to Mortgage Money with Shirley, your girl Shirley with the podcast on today. Today is Wednesday, June the 2nd. We are bright and bubbly for this first month of June, this first couple of days of June. So I sure hope that you all are having a beautiful, blessed day. And welcome to the show. Please share, tag, and invite. We are live on Facebook on both of my pages. We have Clear Sky Mortgage with Shirley. We have my Facebook page, Shirley Nichols, as well. So we also are streaming live today on our YouTube channel with Morris Media Studios. So please share, tag, and invite. Share, tag, and invite. Did I say share, tag, and invite? This show you won't want to miss. We are talking about something very, very important to you who are homeowners, soon to be homeowners. We are talking about the greatest and the latest on 203K home improvement renovation loans. And we need you to know about this. So please tune in today. We are again streaming live right now on Morris Media Studios on YouTube and the Facebook page Clear Sky Mortgage and Realty and my personal Facebook page Shirley Nichols. Please use your comments, questions, any concerns you want to talk about in the comment section of the Facebook page. Or guess what? At the end of the show, you can what? Call in direct right now here live in the studios at area code 323-815-4204. Again, that's 323-815-4204. So there's no reason why you can't reach us. And I say us because guess what? In the studio today, we have the infamous, well-known, well-renowned Los Angeles expert in the 203K renovation world. We have here sitting with my girl, Tanya Morris. Welcome.
Oh my God, Shirley, I just love your energy, love your show, love your knowledge. First of all, thank you so much for having me here. Shirley, I've known you for so many years, and you made a mighty difference. You've been a beneficial presence in the mortgage industry. I've known you for 20 years, and I just want to thank you for all that you do. And you actually have inspired what I do with my specialty with renovation. So thank you for having me on the show. Thank you for the beautiful example that you have set before in this mortgage industry. You make us all want to be excellent because you're excellent. So thank you. We're all excellent. But thank you so much for inviting me today.
Well, Tanya, thank you. The pleasure is all mine. It goes both ways. You've shown and talked to me and taught me and educated me on so much in your specialty. I love it. I cannot thank you enough for being here on today's show. I know you are with Guild Mortgage Company right now. So if you all have any further questions or concerns after today's show, we're going to have Tanya Morris back on the show in the future. But if you have any immediate questions that you want to talk to her that we don't cover today on today's show, please, any referrals, any contacts, any information, see my girl, Tanya Morris, and she will give you all of her contact information to reach her as well. So why don't you give them your contact information now, and then we'll give it to them again at the end of the show.
Absolutely. You can reach me on my cell. I am located here in Los Angeles, California, but you can reach me on my cell at area code 702-204-7609. Also, if you want to check out my website, you can reach me at www.guildmortgage.net/Tanya Morris, TanyAMorris.
Perfect. Thank you so much. So the show is 30 minutes, as you all know who have been watching and following this podcast, Mortgage Money with Shirley. We are on episode 6, and it is 203K loans and renovations. So we're going to jump into it because you know I can get just a bit long-winded. I just love what I do in this business. But because I can get long-winded, and Tanya has a lot of information, we're going to jump right on into it because this is a 30-minute segment, and I like to get started. So the way we're going to handle this show, it is going to be a bunch of Q&A because this detail is so interesting. It's so needed. So let's go ahead and jump in with our first question. I'm going to start off with some basic stuff. So allow me to be basic for the beginning because I need you all to understand. As mortgage brokers, we totally have a plethora of information, but the guidelines are ever changing in this mortgage business. And during the pandemic, the guidelines tightened up. They switched over to stuff that was more conservative. So now that it's starting to relax on the pandemic, we want to bring to you some more important information, updates, and tidbits that can help you on your mortgage journey. So let's go ahead, jump into these renovations. Renovations is a specific title for those. 203K loans is what they're called, renovation loans. If you're needing to home improve or if you're needing to take out extra cash when you refinance to do some home improvements, Tanya is the expert. She's going to talk to us about that. So I want to start off with the first question. What is the minimum FICO score that you can have to get one of these loans?
There is a minimum FICO score requirement of only 620, Shirley. And that's whether you're using the FHA 203K. Fannie Mae has a mirrored program called Fannie Mae Homestyle. Again, only a 620 credit score is needed. It's not very difficult.
Wow. And I mean, I can relate to that because if you all know, Fannie Mae is that conventional loan program. And even on the conventional side, in the regular retail side of mortgage lending, not outside of the 203K, that 620 FICO score could be a bit of a booger, a bit of a pinch to get approved. Most lenders need a 640. So that 620 is huge. And yes. I so appreciate it. Now, is this like with full documentation, pay stub, W-2s? What documentation is required for this?
Yes, that's a great question. I want to mention that these are what we call conventional loans. So we don't do any fancy stuff like bank statements or stated income. Okay. It is truly full documentation of income. So we're going to need what we call the basic universal lender's package. If you are an hourly or salary person, we're going to ask for the 30 days pay stubs, the 2 years W-2. Some people are self-employed, so we're going to look back at 2 years of their full business and personal tax returns, but it is what we call full documentation of income. We don't do alt documentation, and I'm sure you've already educated your audience of what alt documentation could mean.
Yeah, that's that alternative stuff that we'll talk about on a later show. But this is great. This is perfect. So with this documentation and the FICO score, can you tell us now a bit of the process? So if I called you up and say, hey, Tanya, I'm ready to do this fancy 203K because I want to, and let's just say I'm already an existing homeowner, okay? Mm-hmm. I have my house, and let's just say my house right now is worth about $500,000. And I understand a little bit of the lingo that you guys basically fund and finance off of the future value. So let's just take me from start to finish. Absolutely. I call you, hey, Tanya, I have a house. It's worth about $500,000, and I think I want to renovate my kitchen or my bathroom.
Absolutely.
Can you take me what do I do from there?
I would love to.
And then maybe talk right into that camera so they can see your lovely face.
All right. All right. So I want to just share with you that the renovation loan, it's all designed on the after improved value. So you don't have to have any equity. And at times, really, I've helped a lot of people who have actually been upside down in value. Wow, it is the benefit of a first mortgage. So that means if you're using it as a refinance, your home is worth $500,000. Maybe you owe $450. Okay. If you're doing a cash out refinance, you're only able to go up to 80% of the existing value. Right. Well, we don't care about the existing value. Maybe your project's going to cost you $100,000. Okay. You're remodeling your kitchen, you're remodeling a bathroom, and maybe adding some square footage, maybe another master bedroom. Okay. Or maybe expanding your kitchen, your living room, doing some little sprucing up around the property or a lot of sprucing up. And so if your after improved value comes in at $600,000, with FHA, we are able to go up to 110% of the after improved value. So technically, if your after improved value is at $600,000, FHA says we can lend you $60,000 more. So we can go up to a loan amount of $660,000. There you have plenty of after improved equity. So it is a first mortgage. So again, if we're using it as a refinance, when we close our loan, we're going to be paying off your existing balance. We're going to roll in 100% of your full budget, the cost of material, the cost of labor. We even add a 10% cushion. Sometimes if the property is not habitable, Shirley, we get to even add your first 6 months payment, so you don't have a mortgage payment at all.
No mortgage payment.
Sometimes,
for six months.
If you're doing major remodeling like kitchen, bathroom, yes, we can roll in 6 months payment. But it is the benefit of a 30-year fixed, and it's fully amortized.
But let me jump in there. I'm kind of stuck on this 6 months no payment business.
Okay.
Is that going to ding my credit, Miss Tanya?
No, because your payment itself is going to be made through the loan on the first of every month. So if you have a bad habit, if some people have a bad habit of being a little bit late, but not late enough to really ding their credit, well, it's going to be paid on time, at least for the first 6 months.
The first 6 months? You're kidding me.
Yes.
Wow.
Yes.
This is such good news to know. So now, I heard you mention that you guys are going to tie in all the lumber costs, labor. Let's talk about that for a bit, because contractors, do I get to pick my own contractor?
Absolutely. We want you to pick your own contractor. The program will require that you use a general contractor. The program is designed that we're going to completely vet that contracting company to make sure that they have a good reputation, to make sure that if they're doing a $200,000, $300,000, $400,000 renovation for you, that we check with their customers to make sure that they can float that type of project. So we're going to make sure that they are a valid company, good license, good insurance, no pending litigation, no erroneous
running off with my money.
Yes, yes. And thank you for mentioning that, because they're paid as they do the work. So there's no way they can say, okay, Shirley, you have a $400,000 project. I need $200,000 to get started. And they may never, ever show back up. Believe it or not, Shirley, I get at least 1 or 2 deals a year where people have taken out cash and given their contractor every single penny, and they disappear. So it's really designed to protect the consumer, to make sure that you're not working with a predatory company. We're going to vet the integrity of every single number for the cost of material and labor and make sure that you're fairly quoted. And then we're going to pay them as they do the work. So in other words, they have to put their money and their time in first.
Okay, so they got something in the game. They got a little stake in the game.
Yeah,
okay.
Yeah, a little skin in the game. Okay. When you're ready to pay them for legs of work that they've done, we're going to send out someone to inspect, take pictures, make sure that if you paid for hardwood floors, that they put in hardwood floors and not Pergo.
No Pergo, please, no.
We're just going to make sure that it's really designed to protect the consumer at all costs.
Okay. Wow, this is good stuff. So, 620 FICO, eligible up to 110% of the future value.
Yes.
You're going to vet my contractor.
Yes.
Because no one's going to run away with the bag.
That's right.
After all of that, then what are some of the pitfalls, the cons to doing a 203K versus doing a regular cash out refinance?
I would say one of the only cons that I can see is if you're the type of consumer that like hiring handyman to do general contracting work, you're not going to be able to do that. It has to be a licensed contractor. Okay. You're going to pay licensed pricing. But we as lenders, we have to do our due diligence because remember, we're lending on value that's not even there. So we have to make sure that anyone that touched this loan, including your general contractor being involved in the work, we have to make sure that they're highly qualified, highly licensed with the right amount of insurance. So, maybe a handyman can add a room, and I've actually rescued something like this, where the handyman goes out backyard and mark that. Okay. They're going to put up the frame. Okay. They're not going to, pour the foundation correctly. Okay. It's literally a handyman who thinks he knows how to build. We've had that happen where half of the house that was added on started sinking. And they had to end up using our program, tear it all down, and start all over. So I'm going to say it's no pitfalls. It's absolutely beneficial. And even if your home is free and clear, I always encourage people to use this to make sure that you're not going to end up losing your life savings to a contractor who's going to, take off with your money and never show back up.
Right. Wow. I love that. I love that assurance. So you're going to vet my contractor. He's not going to run off with the bag. You're going to have me qualified at 110% of the future value.
Yes.
What is the minimum amount that I would need? So if I have, again, my $500,000 home and I want to renovate the kitchen, the bathroom, and let's just say the skies opened up and someone came by and said, I could do that for $1,000. what is the minimum dollar amount that's needed to get started?
There is no minimum dollar amount. I mean,
Really?
if you wanted to do, a $10,000 project or $1 million project, building several units on your property, you can do that. As far as out-of-pocket expenses, some people who are adding square footage, they're going to need things like plans and permits.
Yes.
We can actually fund on a very detailed floor plan because some people don't have that $10,000, $15,000, $20,000 to get their plans done, and then that $5,000 to $10,000 for the permits. So that's something that we call soft costs that you're actually able to finance right into the loan. So your out-of-pocket investment, just like any other loan application, the thing that you have to pay the lender upfront is the cost of the appraisal. So you will be paying for the renovation appraisal upfront. Everything else, including your closing costs, if you're using it as a refinance, is going to be rolled right into your mortgage loan. And again, this is a first mortgage, not a second mortgage, one payment.
This is incredible. And you mentioned one payment earlier when you and I were talking. You also covered a little bit about the PMI. So if I'm over, we all know, as I've been talking in my podcast, if you've been following, is that pesky little private mortgage insurance bit if you're over 80% loan to value. But I think Tanya has a way to work around this pesky little PMI business that covers no one but the lender. So do you want to tell us a little bit about how we're navigating around this PMI?
Yes. Well, if you're doing an FHA 203K, no matter if you have 50% after improved value equity,
yes,
you're still going to pay mortgage insurance. But Fannie Mae, as I mentioned, has an identical program called the Fannie Mae Home Style. And if you're after improved value, if you have at least 20% after improved value, you're not going to have mortgage insurance at all.
Got it.
But here's the thing, Shirley. A lot of people, even though they may need to have mortgage insurance, when their contractor finishes with their remodel, a lot of times, 9 times out of 10, within 6 months, 7 months, 8 months, they have so much equity, they're able to refinance immediately to drop that mortgage insurance. There is no seasoning requirements. So if you buy a home today, and it's just an ugly duckling, but good bones, and next week you want to start on a renovation refinance, there's no seasoning requirements. You can jump in different loans as much as you want.
Wow.
And you can use this program over and over again.
So there's no limit. There's no timeline. But let me ask you this. I'm glad you touched on the purchase side of it. So I'm driving down the street with my real estate agent, and I see the ugly duckling house, right?
Yes.
And it's, I don't know, $100,000. And my offer gets accepted. I give them $100,000, and I know that the future value is going to be $200,000-$300,000. So what you're saying is, because there's no minimum requirement, I see the ugly duckling house, I grab it for $100,000, then I call you and say, hey, I want to be financed, Tanya, for $300,000. That's a go on the purchase?
That's a go on the purchase, Shirley. We're going to lend you the $100,000 for the purchase, plus the $300,000 for the improvements that you need, for a total acquisition of $400,000. Now, you're going to, if you're using the FHA 203K, you're going to be putting down a 3.5%. Okay. Or if you're using the Fannie Mae version, you're going to put down 5%.
So
of that total acquisition of $400,000.
There is a down payment requirement.
Yes.
So I just wanted to make that clear. Okay, perfect. I just wanted to make that clear because I know we're going to get some call-ins and some questions about that. When you're buying a property using that 203K renovation loan program, there's nothing wrong with buying a property using that program, but you still have to keep in mind you're going to have a down payment. So it's not 100% lending. Oh, but I'm talking about 100% financing. The VA for 203K?
VA has a renovation loan. Right now, VA allows us to go up to $75,000 maximum on the work. VA is the only loan, and as it should be, the only loan that offers 100% financing. I'd like to take the opportunity to just thank the men and women who have served this country. So yes, it's even offered for VA. By the end of this year, we're going to be able to bump that budget from $75,000 to $150,000. But yes, it is available on the VA lending side.
Okay, so did you all hear that? Let's rewind and say it again. If you're going FHA lending and you're wanting to buy this property, the ugly duckling property that you want to fix up, and you're using the FHA version of this 203K, that's still going to be a 3.5% down payment. If you're using conventional as the fixer-upper loan on this ugly duckling purchase, then you're going to put 5% down. And if you are using your VA eligibility, that DD 214, if you're using that VA side of this 203K renovation, 0% down payment up to a max of the $75,000 for renovation, okay? So keep that in mind. This is all good stuff, guys. And anytime that you are feeling like, oh, I wish I could have my dream home, and for those of us here in LA County, we know how the inventory is super saturated and diminishing day by day. We know that inventory is not as such, but you see a property that you want to buy, but it's not your dream home. You think, make it your dream home. Make it your dream home and go get that property and use this handy dandy 203K with my girl Tanya Morris.
Yes.
So
can I add, Shirley?
Yes.
That I have been able to help people who, who maybe had their home free and clear, their home burnt down to the ground. I've been able to help people who have found homes that have been like burnt down to the ground and they want to buy and rebuild. Okay. It doesn't matter the condition of the home. People can be in the middle of a home improvement project and maybe you ran out of money. Well, the bank's not going to lend you money. Mortgage is not going to lend you money on a property that has no kitchen, no bathroom, or holes in the wall or whatever. So it doesn't matter the condition. You can use it even if you've just ran out of money. This is a perfect loan solution to create and finish building the home of your dreams.
Perfect. This is such good stuff. And then on that note, I do have to ask, I have to plug in there because as a mortgage broker, I'm also a licensed real estate broker. I think I've shared that with you all in the past podcast. But I am a licensed real estate broker and I have a listing in Compton. It's a multi-unit in Compton. And Compton, as you all know, Compton, California has been going up and up and up. That value is just bam, bam, bam. But it's a multi-unit, okay? It does need some work.
My favorite kind of property.
Okay, so on this 2-unit, you mean to tell us that potential buyers on this 2-unit in Compton, look it up on the MLS under Shirley Nichols Broker, on this 2-unit, because it needs work, the potential buyer can call into Tanya Morris and say, hey, I'm going to need a 203K to fix up this 2-unit.
Yes. Wow. Yes, and it's going to be 3.5% down. So, we're going to give them, whatever your purchase price is. Maybe they want to, do a whole remodel, add some square footage. Yes. Because if you have that second unit, it makes so much sense because your tenant is paying most of your mortgage. So adding square footage is even great with something like this. We're going to be able to lend you at 3.5% down payment. And if there's work done on the home, like adding square footage or bathroom, kitchen remodels, remember the 6 months payment? We're going to add that in too. Yeah.
Wow. You can buy this multi-unit in Compton under Shirley Nichols Broker.
Yes.
You can do that with a 203K. Now, because we're talking about this 203K business, I did want to ask. Now, we know on the standard side, let's kind of step back from the 203K program and let's switch it over to the standard side of lending without this renovation business. With FHA, we all know that the house has to be in living condition. There's no holes, no cracks, no leaks, no anything in this property. It has to pretty much be stellar on an FHA side when you're purchasing. On the 203K side, what you're saying is because this property needs work, it's obviously not up to FHA standards. We are still lending on an FHA program?
We are. Same guidelines, same loan to value, everything the same except for the benefit is we get to lend based upon the after improved value. And we're going to make sure that you are getting exactly what you want.
Wow.
Yeah.
And so because you're lending on that after the way it's going to look using FHA, let's talk about the qualifications and the eligibility inside of this loan program. On the regular side of lending, not the 203K, but on the regular side, we're using that rental income, that potential rental income from the other units to qualify them on this eligibility. You're shaking your head, Tanya.
Yes.
I love it. I love this business.
Yes, because we get to use, and guess what? Like if you are renovating the rental side of the property, you're going to be able to collect what? More rent?
Yes.
So the appraiser is going to give us the after improved rent value, and we are able to use 75, sometimes 85% of that rent value added to your income so that you can qualify for higher loan amounts.
So you can qualify.
Yes.
Did you guys hear this? Scoot in. Yeah. You are able to use this future rental income up to 75% on the dollar, maybe 85% on the dollar of this rental income. You're able to use this to add to your income that you're making at your job. Did you hear that? So if I'm collecting a potential of $1,000, right, on this unit, because I'm buying a multi-unit, so I'm collecting $1,000 on this unit, maybe $1,000 on this unit. So this $1,000, not dollar for dollar, is going to be added to my income, but maybe $750, maybe $850 is going to be added on top of my income. So do you know what that qualifies you for? A whole lot of property, specifically my multi-unit listing in Compton. Call me. Okay. But this is such good stuff, guys. I hope if you have any questions, comments, or concerns, you're leaving them in that comment section of the Facebook page right now, or feel free. We're going to go ahead and take calls because we got 5 minutes left, Tanya. Oh, did I tell you it was going to go by
so fast?
Oh, it goes by so fast. So we'll give you time now. We'll open up the airlines. Call in at 323-815-4204, 323-815-4204 if you have any questions that you want to ask us on air. If you don't want to ask right now, that's fine, but you can feel free to call the Tanya Morris on her cell phone number at
702-204-7609.
For the renovation specialist and expert needs you will need, hello, or you can call your girl Shirley here with Mortgage Money with Shirley at area code 818-720-7575. Feel free to reach out to me when you need to. After the show, we'll take your calls, but I tell you, we can go on and on and on about these 203K loans. We can just, this mortgage business, I don't know for me, Tanya, I'm pretty sure I can speak for you. It is just the way of life, the breath of life. It's what keeps this economy moving.
Yes.
And it's so needed. You got to live somewhere.
And for me, I don't do any other loan except for the renovation loan. Right. I'm very passionate about it. I like creative people. I like to be creative, and I want to be a beneficial presence and be an expert on something that probably out of thousands and thousands and thousands of mortgage loan officers, there's only going to be a handful of us that are 100% dedicated to this program. And so I do want to be that beneficial presence and help you out, help your clients out, help anybody in the audience out with renovation lending. I'm licensed, by the way, in the state of California and Washington as well.
Wow. Okay.
And I'm getting ready to license in Nevada, which is
Please do.
where I'm originally from.
Please do. Please do, because we do have clients that are in California and Nevada, as I'm licensed to do both states. So please, 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 we need you because this is just overwhelmingly good stuff. I want to just check my notes real quick if I had any other questions, because like I said, we'll have our girl Tanya Morris back on in the studio in future shows. But again, while we have you here, let me just make sure there is nothing else that we need to talk about. Oh, and I do want to ask this, kind of reiterate what you said earlier about there's no timeline. So once I do get this fixed 30-year rate, Fannie Mae or FHA, this is my loan that I can keep. I don't need to refinance right away. I don't have to turn it into another loan. I know back in days before, we used to do construction loans where we'd have to go from construction to construction to permanent. So with this 203K, there is none of that going or switching over to a permanent loan.
This is a permanent loan.
That's what I'm talking
There
about.
are benefits, though, to refinance right after you finish the work, because you're going to have a lot of equity. And, when you refinance, I don't do regular refinances or regular purchases. So when you refinance with Shirley,
yes.
she's going to be able, and even if the contractor takes 2 months, you're going to be able to refinance and pull that MI off right away.
Okay.
But yes, there's no reason to unless it's a benefit. It is a true 30-year fixed mortgage.
So that we can keep for the long haul. This is great stuff, guys. This is great stuff. I hope you all have learned a lot about this 203K renovation home improvement loan. I know I did. I continuously, I'm educating myself and learning more about her specialty, because I don't do the renovation loans. But if you call me after the show and say, hey, who was that cute little lady on talking about those rental loans? I'm going to say her name is Tanya Morris. Please give her a call, and I will be more than happy to give you her information. But always, like I said, feel free to give me a call. It's Mortgage Money with Shirley on this podcast. We are live right now for the next, no more minutes. But we will be back on the third Wednesday of this month. So again, Mortgage Money with Shirley, we are on the first and third Wednesdays of each month. And you know me, sometimes the Wednesdays, life happens and I have to come to you on Tuesday or something. But I will be here twice a month, the first and third Wednesdays of each month. Okay, so tune in live. YouTube is Morris Media Studios, and Facebook page, my personal page, Shirley Nichols, and Clear Sky Mortgage with Shirley. So feel free, come see us, watch the podcast, share, and have a blessed day. Until next time. Thank you so much. Thank you, Tanya.
Oh my gosh, this is so fun.